Hey everyone, welcome. It is 1 o'clock. We just got the closing bell for Monday, July 29th. Earlier this morning, we were talking about how really we just expected the market to chop. We have a lot of reports, a lot of earnings coming up, and we don't expect institutions to make big moves before those earnings. And we basically got exactly what we expected. We opened a little bit higher, we traded down to basically flat from where we closed on Friday, and we perfectly were bounded by the EMA 8 and MA 50. Those were the two levels we were talking about this morning. Although, before we get really comfortable, we really are looking at breaking below that MA 50 and below that 540 level, or above that EMA 20, or roughly the 550 level. So this is just chop sideways, nothing super significant and not unexpected. So if we look at intraday, we can see that we just kind of we got a little bit of range in the morning, but we really just kind of chopped back and forth across that VWAP line. That VWAP was very straight and steady. So really no action to speak of. We're just chopping back and forth. We did initially go down towards the previous day close, like we mentioned on the morning video. And then from there, it was just random back up, back and forth, back and forth. The Russell was a little bit different story. It initially chopped, but then it found a downward motion. And the NASDAQ, a little bit of the same thing. You can see that it did close further down. It wasn't as flat as the SPY, and the Dow Jones flat, just like the SPY. So let's take a look at that in a little bit more detail. So Dow Jones just barely below where we closed on Friday. And if we look at the QQQ, we are basically actually above where we were on Friday, but we traded down throughout most of the day. So this area, so a lot of the trading was above the previous day close. So we just closed a little bit above that. And then let's see if that was true for the IWM. Nope. IWM is distinctly lower. And that tracing kind of back to this EMA 8, it's been trading in this large range. And we'll see, but this does seem like it's doing this. So it may break to the upside, but again, we're not going to predict, especially in this environment that we have right now. We are going to wait for everything to actually happen before we take any sort of position in our portfolios. So the Russell coming down, the QQQ flat, everything else flat. Well, it's going to be interesting to see what type of sector rotation that we got, if any at all. But the overall QQQ is not looking super great. Maybe we bounced off of this level, which happened to be around the MA 90 or EMA 100 level. But we'll see. This is definitely by no means a confirmation yet. So this could very easily still turn into weakness, especially considering the QQEW is not looking great as well. So it's general weakness across the tech and consumer discretionary. So let's look at XLY. XLY distinctly bounced off of the MA 90 up into the EMA 20. It has not crossed above it yet, but this is a confirmation for sure. So confirmation straight into resistance. So we want to see that pop above the EMA 20. That could be good news for XLY, maybe a little bit of good news for QQQ. But if tech continues to weaken, then that's not going to help the QQQ. You see XLK does not look nearly as good. Hit the MA 50 or MA 90 and just sideways. So it's still not out of the water yet for XLK or in the tech sectors. It's still looking very weak, and we'll see because we have the FANG stocks reporting, a lot of the FANG stocks reporting this week. So that will help us determine once those show their earnings, then we'll see what happens with XLK. And that'll determine what happens with QQQ, and then we'll have to weigh the effect on the SPY once we see the effect on the QQQ. All right, let's take a look and see what happened in our bonds. Bonds popped up, but traded a little bit lower. So we're really just chopping. And we need to break this range right here. Before we get comfortable with a directional move, there's a lot of news coming up in the next few days. So we really want to see. And if that news doesn't bust us out of this range, then we're in for some choppiness until we start to get a change or a shift in the probabilities that are predicted by the bond market. So as long as we're stuck at 100% at a September rate cut, we're probably going to be range bound. So we'll see if the July decision, or more specifically, the conference after the July report, gives us a boost either up or down. Realistically, it can't. Up is really limited because what are they going to say? Oh, maybe it looks like we're going to cut rates. Well, it's already priced 100% into the market. So there wouldn't really be a big reaction to that. But if they say, oh, no, we're going to delay, then this could be a big reaction to the downside. So a TLT put could turn into a pretty good tail risk trade because you have very limited upside risk, but you have a lot of potential on the downside. And maybe they end up not reacting, or the bond market ends up not reacting to the news, but then you just have chop sideways. Just give yourself enough time in terms of time decay so that if it doesn't really react at all, you can get out at a similar price that you got in. Well, otherwise, that's a pretty good reward to risk ratio if it can fall all the way at least to this level, which is 91.5. Let's take a look at our VIX. So that was the one thing that we wanted to watch very closely. What happens if VIX? Does it start to break below the 15, or does it break above 19? And really, I don't think we broke either one of those today, but we want to see if there's a directional movement, and it's sideways. So we came down on Friday and then sideways today, slightly elevated, but again, nothing to be excited about. We're within that range bound 19 and 15. Let me draw another line just so we have it on the chart. So as long as we're in between these ranges, we're not going to get too excited. We're most likely going to stay in between that EMA 20 and that MA 50, or that 540 level that we were talking about on the SPY. Let's look at VVIX to see if that's flattening out. If that's flattening out, then we're probably just chopping sideways, and it's coming down a little bit. So that is implying a deceleration in the VIX. So just from that alone, it looks like there's maybe a little bit more likely that we'll go towards the downside, not necessarily break through the 15, but at least head towards 15. That's just a little bit more probable than shooting back up to 19 at this point in time. Okay, I think let's take a look at let's look at our momentum first, and then we can look at our 90-day highs and lows, and we can look at our sectors. So let's look at our momentum. So overall in the markets, that's the wrong one, $2 and above, we're looking pretty healthy. Nice breath, 67% above their 50-day, 65% above their 200-day. So what we really want to see is, are there any sectors that are underperforming that? Because as a whole, the index looks good now. So discretionary on the verge, 50 and 60. So that's a component of the QQQ. Energy on shaky ground, we'll take a look at energy. Tech, okay, but not great. I wouldn't say that's bad at all, but it's relatively weaker than most of the other sectors. Okay, so still, it's really those QQQ sectors that are really giving us trouble. Russell 2000, very healthy momentum-wise. Dow Jones, very healthy momentum-wise. NASDAQ 100, that's where we are 46% below. The only area we saw below 40 or 50% was energy. So it's interesting that the NASDAQ is below its 50-day, or it has the majority of the stocks in it below their 50-day. But when we break it down into comm and tech and discretionary, all of those are at 50% or above. So that's that's making me curious which ones are dragging this down below their MA50. What it implies is that most likely some really large cap stocks, mega cap stocks, the FANG stocks are below their 50-day moving average. So we can verify that real fast, but we can look at the XLE as well. So let's look at XLE. XLE is really, it's kind of chopping sideways. I wouldn't touch this yet. We'd want to wait for a breakout or it pull back to the MA200 and see if it bounces from there. Right now, it's not looking, it's just very choppy. And this trades more like a commodity. So it's not something we want to get into right now at this moment. Let's look at our major FANG stocks. Let's Meta, below 50, Apple, above the 50, Amazon, below the 50, NVIDIA, below the 50, Microsoft, below the 50. Okay, so we're seeing the theme here. So what I was saying over here was correct. So it looks like those mega cap stocks, even though they still look like they're in a healthy uptrend, they are, most of them that we just looked at are below that MA50. And that's why that momentum is not looking great on that NASDAQ 100, even though when we look at the individual sectors, the sectors look like they're okay, or at least they're not below their 50-day moving average. So they don't have more than half of the stocks below their 50-day moving average. So these FANG stocks are really weighing down on this market right now. They're not how the market is kept in check by all of these FANG stocks. So this week is going to be really, really important. The performance of their earnings, the remaining earnings that we have, like Google, right below its MA50 after earnings, it reported good earnings surprised to upside, revenue surprised to upside, but it still kept on going down through that MA50 and has gone down since then, since reporting. So that doesn't bode well for the rest of the FANG stocks. It shows us that even though if we report good earnings, there could be other things that people are looking at, that investors or institutions are looking at in the future of these large cap or mega cap tech stocks that they're just not liking that much. And if we get another breakdown in any of those that we mentioned, I think Apple was the only one. Was it Apple? Yeah, Apple is the only one that we saw that was above the 50-day moving average. So if Apple goes below the 50-day moving average, then that's going to really move the QQQ downwards, and all the rest of them. If they can't pop back up above that MA50 after earnings, then we're in a little bit of trouble on the QQQ. And that could topple, because that would spell trouble for the SPY as well, because all of those are also in the S&P 500. That would drag the S&P 500 back below the MA50, probably at the very least down to that MA90, and we'll be on our way towards that MA200. So it's a good idea to have hedges on right now, because even though we're in an uptrend and even though we're in a bullish market, we are at one of those critical decision points, and we could still be in a bullish market but have a 10 to 15% correction. So we've moved about 5% so far, so there could be another 5 to 10% to go, and we can that can be pretty damaging to a portfolio if it's leaned bullishly. So if we break it down below, so it's not really appropriate for us to lean our portfolio bearish, but at the very least, we can either hedge or throw in some tail risk trades to just capture the possible event of us breaking down below that MA50 and the S&P 500, and the QQQ breaking below this support area around the 463, 465 area. 453 or 455 area. So that's probably the only position that I would take right now. There's just too much uncertainty. I don't want to put on any directional trades at the moment. I definitely don't want to put on any range bound trades or credit spreads or income type of trades, because we don't know. The volatility of this could suddenly spike and we could get a really directional move and we pick the wrong side, or if we have something that like an iron condor that is range bound, we could easily blast through any of those. We've had increasing ATR throughout the last couple of weeks. So that volatility is picking up, that VIX did pick up, and that is all dangerous for credit spreads or income style trading, because generally in income style trading, you have a high probability but a very low or terrible reward to risk ratio. So if you hit the low probability event and you just lose way more money than you would have made. And so one bad trade or one trade that doesn't hit can erase 4, 5, 6, sometimes even 10 trades worth. And that's pretty devastating, is that undoes a lot of work. So you think of your income trade as at the fastest, maybe one weekly, like a 1 week trade, usually maybe 1 or 2 months. So if you can just imagine on a single trade, I erase 10 weeks to 10 months worth of work. It can be pretty devastating. So now is the wrong time to put on those spreads, unless you put on a spread that has a really good reward to risk ratio, not income style. So not high probability, terrible reward to risk ratio style. So you just be very careful with those types of trades. And we want to the best thing to do, in my opinion, is to just wait for certainty to come back into the market, and then you can go with the direction that the market is trading at that point in time. Okay, so I don't even know if it's worth looking at sectors, but I guess just out of curiosity, we can see if money left or came into a particular sector, but I'm not going to look for opportunities right now. I'm just really just going to wait and see how everything plays out throughout this week. So today was a wait and see day. Tomorrow is going to be another wait and see day. Wednesday, we have the FOMC, so there's a good chance that we won't have to wait and see, but at least for tomorrow, there's a really good chance that we're going to chop. And then once we hit that FOMC, there's who knows? It could go sideways, it could go up, it could go down, it could gap, it could do all sorts of things. So it's just better to just be hedged or be all in a cash. So we've got 223 90-day highs, only 16 90-day lows. That's really interesting for the indices that only moved a little bit, mostly sideways, maybe a tiny bit up, but we got increasing momentum. We have the 90-day highs previously. Why don't I have? There we go. I guess that we hit 300. I didn't realize that. 150 to 300, so we came down a little bit. But the 90-day lows are at a very low. They stayed double digits and it actually decreased. So this is indicating choppiness to me. So we're still in choppy territory. And then we'll just see what sectors received money and which ones lost money. Okay, XBI, IWM, XLE, SMH all lost money. And then once that got her, interestingly, consumer discretionary is our top performer, and communications. So real estate, so a lot of interest rate related things got a boost today. And then tech and energy in general, biotech, that lost money. I don't think that doesn't really tell me too much interesting. Interest rate. So that is just a reflection of maybe a little bit of expectation of a rate cut, which seems really silly to me, but it is what it is. But really we have to see that it's probably not major institutions. So one thing we forgot to look at was the volume, and the volume is at, where's my volume? Keep losing volume. There we go. Okay, so it's at 34 million. I'm not sure. We should have gotten the dark pool stuff already, but even if we didn't, then that would put us at 45 million, put it us right at the moving average. So we're either at the moving average or we're below it. So there's just not a lot of money that got allocated today. So I'm not going to read too much into this right here. That's probably mostly the work of algorithms. So let's take a look. Let's take a look at the charts. Yeah, that'll bounce up to the EMA 20. That could very easily fall back down, bounce up to is that the MA 50? That could easily just reject and come back down. Real estate hitting a resistance area. Home builders looking like it might break out right at the very verge of it. So we definitely want to see confirmation. Same with utilities, and TLT is just sideways. So we're not going to read too much into the data. It looks like just algorithms playing around. So we're just going to sit on our hands. We're going to see what tomorrow brings us, but most likely we're going to have to wait until after the Fed conference, or Jerome Powell speaks after the Fed rate decision, before we really see a possibility of any directionality. So we're going to play the waiting game for another day. Okay, that's it for today. I will see you guys tomorrow morning.